What's up? What's up? What's up, my mind your money business folks? It's me yet again with another video on today's stock market. Like, what's going on in the stock market, people? What is going on? Hope you guys are having another blessed day. It is Saturday morning here, my time, as you can see by the light behind me. But it is Friday back in the United States of America. So what did the stock market do today? It says NASDAQ, S&P 500 pop to strong weekly gains. That jobs report was good. The jobs report were good. And that is going to boost Jerome's decision, Jerome Powell, the Fed chair, to cut rates on December 18th by 25 basis points. Have my morning coffee. Then after this, I'm going to go on a walk, about a 4-mile walk. I'm not going to work out today. Getting older. Just trying different things. Either way, enough about me, right? So let's get to this. It says U.S. stocks mostly rose on Friday as investors digested the last monthly jobs report of the year. People. A crucial test of prospects for interest rate cuts in December and beyond. Right? The Dow Jones Industrial Average lost about 0.3%, while the S&P 500 rose roughly 0.3%. Meanwhile, the tech-heavy NASDAQ composite increased 0.8%. Amazon, Apple, Meta gained, tapping all-time intraday highs. Nvidia lost The daily results of the majors gouges also reflected their weekly performances. The Dow shed about 0.6% for the week, while the S&P 500 gained about 1%. The Nasdaq climbed more than 3%. So the U.S. economy added 227,000 jobs in November, slightly more than expected, as the labor market rebounded from October data that was dinged by severe weather and labor strikes. It's like that was already a thing of the past. No one's even talking about the storms anymore or the strikes. But yeah, that just happened. So the unemployment rate unexpectedly ticked up to 4.2%. Why does my So Yahoo Finance Josh Schaefer has all the details. Well, you can find that on your own. Okay, the report largely matched hopes for a Goldilocks reading, strong enough to dampen concerns about the economy, but soft enough to keep the Fed's option open on lowering rates this month and into next year. On Friday, markets were pricing in near 90% odds the Fed lowers rates by a quarter percentage point on December 18th, per the CME Fed Watch tool, compared with about 70% before the report. So that's a good thing. That's a good thing. Meanwhile, the rally in Bitcoin continued after slipping, trading around $101,000. Damn, Bitcoin. That's good. And this was on Friday afternoon. Options show some investors are hedging against a deeper pullback after the leading token's record-breaking surge to over $100,000 for the first time. See, that's just the game I don't like, playing this whole options thing. It's like currently, like Nvidia. Like Nvidia is doing well. They're continuing to expand their services even in other countries. But the stock continues to like be held, go down, go up a little, then it goes back down, while other companies are expanding. But you have people, um, well, the fact that say Nvidia keeps going up and down, you have these option traders. You have hundreds of millions of dollars being bet against companies. They're betting that the company goes down. So when you have those options in there, that's a lot of money that can be made. So you have people purposely pulling money out of the stock because they're also betting against the stock. And then when it ticks down, it hits that target price, then they make hundreds of thousands and possibly millions of dollars, right? And then they bet that the stock goes up. They put in options, puts trade, whatever. I don't know anything about day trading, right? For the stock to go up, then they put money into the stock. Then the stock goes up. Then they make a lot of money. It's like a game they play. And I wonder when they're going to stop playing it with Nvidia. But the rally for Bitcoin has been spurred by hopes of support for digital currencies from President-elect Donald Trump, who on Thursday named former PayPal COO David Sacks as his White House AI and crypto Caesar. That's interesting. On the corporate front, shares of Lululemon and Ultra Beauty jumped in after retailers both boosted profit forecasts. So that is it. So things were good for some people, for some companies in the stock market, like Serve Robotics went up 23.82% today. SMCI, Super Microcomputer, went up 6.78% today. My information technology ETF went up 0.51% today. I wanted to talk about this. Here's the thing. That's why I say investing is good. Let me see, what is it? Year-to-date returns on my information technology ETF, FTEC, that's Fidelity's MSCI, Information Technology Index, ETF, Exchange Traded Fund. Year-to-date return is 33.48%. What if I just left my money in the bank? What if I had never invested? I would not have made 33% on my money that I invested. Yeah. S&P 500, my SPLG S&P 500 ETF. It went up today 0.21%. Year-to-date returns on my S&P 500 ETF is 27.94%. You're not getting that from the bank. The market fluctuates. But on average, the S&P 500 over the last 100 years has brought back over 10% returns. Granted, there have been some years maybe only 7% returns were given in the mid 1900s, right? You know what I mean, right? Either way, right. I'm answering myself in my head. But either way, but let's say, but then there have been years where there were 15% returns, there were 20% returns, there were 23% returns. Right now, year to date, and we're in December, and the market is typically good in the month of December, we're at 27, almost 28% for this 1 year, right? Tesla had a nice day. Tesla went up 5.34%. Year-to-date returns on Tesla, 56.64% return on that investment. If you had made one at the beginning of the year, you continue to dollar cost average into Tesla stock. And Tesla since uh, November, after the election, Tesla has jumped big time. Tesla's current market cap. Tesla for a very long time was under a $1 trillion market cap as far as how much the company was worth. Today, Tesla is worth $1.249 trillion. That's amazing. So it's like the company had jumped, like, let's just say $300 billion in like the last month. Let's see what else we have. I already said that. Oh, so I read this book about VTSAX. That's the total stock market index fund, right? It covers everything. It covers big. It covers the S&P 500 companies. It covers. Slow down. It covers large cap, mid cap, small cap companies, and micro cap companies. It covers the entire stock market. Like, if you are not sure on what to invest in, and you if you don't know what to invest in, or you're unsure of yourself and you want to do it on your own and not have a financial advisor do it for you, you can invest into VTSAX, which covers the whole entire market. Your money is not just into one single stock. So if that company goes down, you lose all of your money. When you invest into like these S&P 500s or these information technology ETFs, your money being invested into that ETF, yes, but it's being spread amongst those companies. All those companies have been packaged into that one ETF or VTSAX. VTSAX has probably over 3,000, maybe 3,000 companies within that one index fund, right? So year-to-date returns on VTSAX is 27.11%. That's good, people. That is damn good. And currently they have $1.75 trillion in assets. So I'm talking more than I should, right? But I can't help it. I talk a lot. So let's go with this. So VOO, Vanguard, is like the Maybach of cars, or the Lamborghini, whatever you may consider the best car, or the most luxurious car, right? Or the most expensive car, a Bugatti. So Vanguard, VOO, is the Bugatti of S&P 500 ETFs, right? Vanguard's S&P 500 ETF is VOO. Year-to-date returns on VOO is 27.94%. For one VOO stock, is $558.82. That's a lot of money. And a lot of us beginners don't have $558 to invest into just one company. You want your money to do a little bit more than that, right? So VOO is the same as my SPLG. My SPLG pretty much is SPDR, Portfolio S&P 500 ETF. They both have the same stocks. Year-to-date return on my SPLG S&P 500 ETF is the exact same as VOO, over 27%, 27.93, 27.94%. Same return. My SPLG ETF is $71.52 currently. Like, I bought it when it was much cheaper, but it's currently at $71.52. So $558, $71, same funds. Well, not same funds. Yeah, they have the same companies within their funds, just different companies, different prices. You can get more for your buck with SPLG. You could buy more and make more return on your money with SPLG. So let's say, again, people in the investment world may look at Vanguard as the Bugatti. SPLG, uh, it's the Camry. Camrys last you a long time. No, let's not say Camry. Let's say Volvo. No, because I've had my Volvo for a long time. I have a Camry and a Volvo. I've had my Volvo for a very, very long time. I've driven my Volvo from North Carolina all the way to Washington State. Then I drove it from Washington State to Northern Virginia. I've driven that car to, when I was in Washington State, I would drive over to Canada. Great car. Great car. I've driven that car in the Middle East. I've driven that car. It's been shipped all around the world. No problem, right? So let's say SPLG is Volvo. And the VOO is Bugatti. It just depends. If you want to spend more money because you have more money to spend and you're not looking at anything else, you don't see the Volvos because your eyesight, because of your wealth, you may only see VOO, and that's your only option. You're not looking down here because at the end of the day, it doesn't matter because you have the wealth and you have the money, so you're going to invest in the more expensive stock. But those of us that are not wealthy yet, SPLG is the way to go. And VTSAX. And VTSAX, again, covers the entire stock market. You can invest in that for the rest of your life if you want to. And the thing is about these stocks, you do not have to be the expert. You do not have to sit there and try to do all this research to figure out which one company you need to invest in. Oh, should I invest in Amazon? Should I invest in Meta? Should I invest in Google? Should I invest all my money in Nvidia? Should I invest all my money in Apple? Should I invest my money in, this and that? No, you don't have to be the expert because within those ETFs, like the S&P 500, those companies are already in there. So you literally are investing in those companies already. And then here's the thing. Say if one of those companies in the future goes under, the portfolio manager, the expert, will pull that company out of that ETF and replace it with one that has the market cap to be in there, like maybe over $1 trillion or so, right? Whatever the cutoff is. They will simply replace it, and you will not lose all of your money. So think about that. So Apple's down 0.08%, but I've already talked long enough. All right, so hopefully you guys have something planned for this weekend. Just get out and enjoy. Get out and go for a walk. Health is wealth. That's another thing. Like I talked about that in my video last night before I went out about how you have to protect your health. Also your time, people, your time. You can get your money back. You can start investing today. But what if you start investing today and your health is in poor condition? So you have to come up with a plan, because the only thing that you would not be, you may be able to get your health back under control. You may even get your money back when you start investing. But one thing you will not get back is your time. So stop wasting your time doing things that are not benefiting you or your family, or creating a solid foundation for you in moving into the future. Stop wasting your time, people. You're not going to get it back. Time is a commodity. We spend a lot of time. You spend a lot of time at work. You dedicate so much time at work making these companies a lot of money, which is fine. Then you make money, which is good. Why do you not have control over that money that you're working so hard for? That's crazy. You work so hard, but then you have no control. And then here's the thing. It's okay if you don't know how to control it or what to do with it. That's why you slow down, turn the freaking TV off, turn the radio off, get off of social media, and start putting in the work. And that may be the problem, because you work all day. Now you don't want to work on figuring out ways to invest. But hey, that's okay. It's like when your car needs to be fixed, you can't fix it. You're not trying to fix it. You take it to a mechanic. So with your money, you go to a financial advisor, which leads me to my disclaimer before I end this video. I'm not a financial advisor, and I'm not pretending to be one. You know, any and all information on my channel and in my videos are for entertainment purposes only. And a lot of these things, well, everything reflects, they're my opinions, right? So before you invest any of your money, please seek financial advice, unless you choose to do it on your own. And if you choose to do it on your own, that's good. But at the end of the day, it's you. The answer is you. What you're looking for is you. You need to start believing in you. Stop giving all your power away to these outside entities and things that make you feel a certain way. And you're caught up in your feelings. And then when you come out of that trance at the age of 60 and you realize you have no money saved, nothing invested that you can rely on, and you're screwed, and you're older, and you're sick, and you're overweight. All right, you guys. Oh, everything's fixable. You know, as long as you have eyesight, breathe, and you can get up. If you can look up, you can get up. You can improve, right? But our younger years are our most valuable years. That's when we should be putting in the work, creating a plan, setting up for age 50, 60, to where it's like smooth sailing, smooth transition. Yeah. All right, you guys, take care. Have a great day. Peace.